Hey, John Higgins, Mortgage One. Happy Monday. The market continues to be really tough as far as interest rates go. We did get a little bit of a safe haven play off all of the events that are going over in Israel and Gaza, but that really has not changed the trend at all. We have seen inflation numbers that have come out in the last week, although they're better than what we saw maybe a year ago. The trend there seems to be a kind of a stalling out of the downward trend that we've been experiencing over the last number of months. So that's put a little pressure on rates. We have oil off the events in the Middle East going up. That is bad for inflation. The jobs number that we got a week and a half ago, not good. If you're looking at what the Fed is trying to do and kind of break the back of employment and get the overall jobs number down to probably something closer to zero. We had over 300,000 jobs created in the last report. So all of these things have been very, very tough headwinds for interest rates. And we continue to remain above that 7.5%, nearly 8% rate on 30-year fixed money. And that's not good for the housing market. There's certainly no incentive for a home seller to bring their house to market if they have a 3% interest rate, trade that in for an 8% rate, unless there's some overreaching issue. And that's been the number one problem with our market right now, is just lack of inventory. I think the buyers are out there. These interest rates not necessarily scaring them away completely, but it's just been a really, really tough market. As far as where do rates go from here, again, we've got to watch the data. It doesn't look like the Fed is going to raise at their next meeting. So that's probably a good thing. A lot of the chatter out of the Fed has been that they're probably going to be on hold here, but that doesn't change the downward trend we've been as far as prices on bonds, and interest rates move inversely to pricing. And so we've been in this upward spiral as far as rates go really since the summer, and there's nothing yet that shows that we're going to break out of that. So we'll see what happens with some of the data this week. It's not a big calendar on this week's data, so don't expect a major change in interest rates anytime soon, and we'll keep you up to date with another update next week. Take care. We'll see you next week.